to introduce Jo Vadillo. So Jo is a leading buyer's agent. She's a well-respected influencer in the property market. She heads up Property Women, which is advocating and supporting women investors by providing online education. She's an author. She's a frequent public speaker, mentor, coach, and above all, she is an avid property investor. So welcome, Jo. What a bio.
Thank you. And look, just to add to the feather in my cap, I can also raise 3 boys at the same time and kept them fed. Which that's 18 meals a day, Amelia. Position, that's it.
So start off. So do I need a buyer's agent when I buy a property? It's like obviously everybody wonders obviously how it even works.
Okay, so look, I guess the short answer is if you love property, you've got all the spare time in the world, you know what you're doing, you know how to do the research, you've got access to the software, you're a fantastic communicator, you're well researched yourself, and a lot of people are very well self-taught in that space, then perhaps you don't need a buyer's agent. However, if you are, your inability to potentially negotiate, to do the research, you're time poor, you're nervous or anxious, you want to make sure you make the right decision, because almost everybody uses an expert when they sell their property, but they walk into a property blind. So it makes sense that you would actually use an expert when you buy, because most of the time that is when you make the right decision, right? You save money on, with your negotiations are savvy, or you don't buy the property because you found out through doing some research that there's about to be, a 6-story complex in the backyard throwing shadow over your yard. So yeah, buyer's agent, of course, you're speaking to the converted, and I've used one myself twice. A fantastic person to have in the team.
I think you raised a really good point. Like, I would probably feel comfortable with buying something in my little local area, which I know, and I kind of research and don't research, but I know what's sold and when it's sold and things like that. But if you told me to go and buy a property in Brisbane, I'd be like, oh, I wouldn't even know where to start. So I think you make a good point that know your limitations and get in hired help when needed.
Absolutely. Yeah.
And so in saying that, like, there's obviously different times in the process that you can engage a buyer's agent. So when do you engage a buyer's agent?
I have a bit of when I work with clients, there's the 2 versions. It's I'm, about to go and get approval. I want help. I know my limitations. So, how do I work with you, etc. And then I've got the people that have been looking for themselves for, could be 3 months, 4 months, 5 months. I've even had a lady come to me quite some years ago. She said, we've been toying with the idea of investing for 20 years. And so sometimes it is buyer fatigue. They've missed out at auctions. They just can't get in. They can't communicate with the agents properly. And so, so I guess it's a little bit of a crossover where people will come to me. So sometimes it could be ahead of the game, and sometimes it could be on the back of defeat. I need help. I need support.
And then we've spoken before about you helping with the strategy as well. So saying just say that lady comes to you and says, like, I don't know if we're wanting to do a buy and hold, if we're going to flip it or something. Do you help with that process as well?
Absolutely. Yeah. And look, I've actually talked people out of making purchase decisions because they could be, and this is actually genuine on the back of things like the TV shows like The Block, where people make, absolutely inflated outcomes of, at auctions, and it's televised and everyone watches it. Everyone goes, oh, I want to be a renovator and flip a property too. But then I've got a client who comes to me with a 2-year-old and she's pregnant. And I'm like, I just don't know if this is the right formula for you at the moment. Or perhaps the market's showing it's going to cool a little bit, and there's just so much risk if that's your formula. Walk into a market where your 4, 5, 6 month projections are a little bit, potentially not skewed in your favor. And once you take into consideration all the taxes and stamp duty, capital gains tax, holding costs, et cetera, it can be a little bit of a gamble. So I just want to make sure when I'm talking to somebody that they know what they're doing, they're buyer beware. And I will say to people, I just don't believe this is going to be a really good, a good investment option for you.
Yes. And when you're looking at investment properties, like, how do you determine the value? Like, what do you look at from the value point of view?
Well, I'll give you an example of one I looked at today, which I think is amazing, to the point where I even said to my husband, if we were like buyer ready today, I'd want to buy it myself. It's got water views. The software tells me that it's actually worth 150,000 more than what the agent's asking. I know the agent is undercooking the price, which is you'll commonly see because it gets more buyer interest. But I look at what else is sold in. This isn't complex, but it's got water views, but I look at what else is sold in that precinct. I've got the software that will tell me the last 6 months, 12 months, 18 months. And that gives me a really good idea to say, well, this is not yet renovated. Imagine if it was renovated, because the views will still exist, but all of a sudden I'm going to have a modern kitchen, modern bathroom and things like that. So I look at area comparisons, and that's ultimately how I help draw an opinion of how it's going to be.
How do I find a profitable investment property? What should I be looking for?
It's kind of a bit of an organic unraveling for that one, because what's your budget? Where are you prepared to buy? So some people are very nervous investors and they feel they need to be able to drive past that investment property, which isn't necessarily a smart strategy. If you've got a buyer's agent on your team and you're going to surround yourself with really strong experts to support you, including a good property manager at the other end, you don't need to be within a drive distance. Now, if you live in Sydney, that's going to limit where you're looking, and therefore, it will limit what you can afford potentially if you've got a bit of a tight budget. So to know what's going to perform really well, I always look at what's going on in the area, infrastructure, amenities, the age of the population. Is it a Sleepy Hollow? Is it a retirement area? Or is it bustling? Is Westfield's opening up? Costco, IKEA, Bunnings? All these companies would pour hundreds of thousands of dollars into area research, and you follow where the market is going. If it's a boom town, like we talk about, say 2 hours north of Sydney, we look at areas like East Maitland, $500 million is being poured into a public hospital. They're not building that for nobody. There's a reason. The population growth is going to follow. Yes. And I think that's a really clever strategy, is to follow where other people have sunk the money in the research.
Yeah, excellent. And then on top of that, so obviously there's a lot of talk about unit versus buying a house. What's your take on that?
Look, sometimes units really suit people's personality types. And again, you've got ongoing strata, but they look after the cleaning, the maintenance, everything like that. So it's a nice set and forget for many people, and they like that security. It just means they're not going to get caught up out of the blue, because of something's gone wrong. It's been cared for. I personally am team house, because you can modify the house, you can change the street appeal. It could be landscaping, it could be painting, it could be replacing windows, window dressings. There's many things you can do to add value to your property. So I'm always going to be pro land over apartments. But with that said, I've had both in my portfolio more than once. And they've all performed quite well. So sometimes if your budget means you're only at an entry level, and that is an apartment, just get on the ladder. I think that's more important than sort of haggling to get a house that could be, I don't know, an hour and 10 minutes away from the nearest capital city. And I think, you need to weigh those pros and cons up.
Yeah. And that kind of is a good segue onto my next question, which is, can I begin investing with little to no money?
Well, look, yes and no. So I guess if we're talking to my property circles, then the answer is absolutely. There's a yes to everything, but you get told no. The broker says no, the bank says no, the computer says no. Keep knocking on doors. Now, a situation with a joint venture structure or something like what my property circles does enables you to actually set something up so that you may have the borrowing capacity, or you may have a deposit, or you may have an idea and the time to do the renovation, and you can get other people on board to support you with that, with them putting the funding in. So your contribution is time or knowledge or something like that. So yes is ultimately the answer. It takes a little bit of tenacity and a bit of savvy behind that, and obviously having the right security around you, the right structure and the way it's set up, and those terms of agreement done. So ultimately it's very, very much possible.
Yeah, and look, we've done some research ourselves that, as you say, like you could invest now into that unit by yourself, or you could wait and save up for that house.
Yeah.
You could do it together and get the house and get the capital gain on that potential.
Yeah. That's right. Look, I'm not a fan of the wait, or I'm going to wait to see the market cools down, or I'm going to try and save some more money, because most of the time in a rising market, you're never going to save quicker than the capital growth. unless you're on a pretty decent wicket as a PAYG, in which case you wouldn't even need to be using that as a structure for yourself. So I would suggest, and people, and I had this happen to me in 2020 where they're like, we're just going to wait in the back of COVID and then pick up the crumbs of people who couldn't make it. Big mistake, because the market just kept moving. I mean, okay, we didn't know that, but it was a dangerous play on strategy.
Yes, yes. And so how can I maximize my investment profit? What am I looking for? Or what am I looking to do? Like you've spoken about, obviously not having to be to have a property in the same suburb or same town that you live in. But what else?
Look, I like to look at properties that have got a something extra going on. So whether if you're looking at a house, it's got good bones. You may not want to renovate it. You may not have the budget to, but it's got to have a good structure and a good opportunity there to do something. And it could be just initially just freshening up the carpet, flooring, and painting everything white, which instantly lifts a property's facade, or the interior, I should say. So that's one thing I'll always look for, is just, good, solid property that's going to like stand the test of time. I like looking at places where there is potential to do a granny flat or a subdivision or a little something else, and it could be just a quirk, and you may never even need to do this as the owner, but when you sell it, that's also an attribute. You could say subdivision potential, could be have a granny flat, and that's something that an investor will pay a premium for, because land is a scarcity. We're not creating more of it, around the capital cities. So that's definitely one avenue I would take. And again, with apartments, if you're going to buy into apartment, there's elements you can't change. Obviously the floor plan, there's some limitations to what you're allowed to do, but get the apartments that are facing the light in the right way, with the views that have got, they're not right above the car park entry, so you hear the garage doors open or the bins are getting collected, et cetera, et cetera. So they're the sorts of things I think as an investor, you've got to be mindful of its long-term growth potential.
Yes. Yeah. You can change the internal of a house, but you can't change the position of the sun.
That's right. Yeah, exactly. Yeah. So, and obviously anything with a view, walkability, it's got to be something your tenant's going to want to be, wanting to fight over to have that opportunity to.
Yeah, absolutely. Yeah. And so, so not only do I have to think about obviously all the property costs, but I need to think about the closing costs. So what would you say to someone when they're kind of doing a budget and trying to organize that?
Yeah, absolutely. That's obviously, you really need to take on board all of those sorts of costs as well. So you've got your stamp duty, where calculators are online and they're very easy for you to use, and they're highly accurate. So that's one way of looking at the cost of that. With a solicitor, I mean, they're really, I've got access to a fantastic network of affiliate partners. So I would suggest budgeting around $1,800 for a solicitor. Pest and building reports, again, it could be $450, it could be $650, it depends on the size of the dwelling and where it's located as well. If you're using a buyer's agent, there will be buyer's agent's cost considerations to put that into the mix. Have I got everything? What else we got here? Strata report, if you're buying into an apartment, And sometimes these things are sold on a discounted position by the current vendor. So there's opportunities that you could look at these things without paying the full brunt of it until you actually own the property as well. They're like a strata report's really important.
How do you feel about that? Because obviously there's also building reports that you can buy through the agent as well. And I kind of, every time I've done that, I thought, should I be doing my own, or should I take their word for it?
Yeah, look, ultimately, and I do know people have these cross feelings about this, but you're dealing with an independent company that's putting their name to paper and doing a report, so that if they fudge numbers or fudge the situation with a house and the ceiling caves in because it's riddled with white ants and that wasn't detected, there is that insurance, I guess it's a bit of an insurance policy for you. And I'm sure there's people out there that do lack integrity. So obviously it's a buyer beware situation, but most of the pest and building reports that I look at seem to be very honest, very open, lots of disclaimers. I mean, that's the way the industry works. But I think if you read a report for $49 and you go, well, there's a few things here that make me concerned, then it's worth perhaps buying an independent one so you can have a more thorough overlook of the property. And it's a small cost to pay. If you're going to be spending $1 million, a $600 report, it's not much to ask for. One thing I will also say, just with the cost of purchase of a property, always speak to your accountant. before. And so there is probably depending on your relationship or how you've structured your business with an accountant, you may want to spend that few $100s to have them overlook numbers, or to make sure you're buying in the right entity and naming convention as well. So always share that sort of decisions when you're making those big financial decisions with your accountant. It's really, really important. So there would be a cost for an individual there.
Yeah, absolutely. And from a tax point of view, definitely. Yeah.
100%.
So we don't have any questions. So I'd like to thank Jo for joining us today. I really enjoyed our conversation, and I hope everybody else has too. I've got some contact details for Jo. If you would like to get into contact with her, you can. And thank you very much, Jo. And we hope everybody enjoys their day. And thank you for joining us.
Thank you.